an overall view of how all of this works. The drop you've seen so far is a considerable one. You've come well off your key moving averages. All of them are just far, far higher up. The drop overall is about 1450 pips, 1500 pips, something around that area. So what you can see here is quite typical of what you would expect to potentially cause a continuation of this. And it's just a bounce up to your 20 MA. So it doesn't look very strong. You have had some reaction, and I'll just be looking for a bit more, or indeed a lower price if possible. Now, at this point, because I've spent so many years identifying key price action levels across various assets, I know really where I want to start buying. And it's probably going to be just under where we are, but I'm happy to add something now anyway. And because the price has fallen for such a long time, my size can be considerably higher than what might be usual. Okay, so I'm going to take a 0.5. You can see immediately, nice big push up. And I'd probably want to kill it at a reasonable level in case you start to dip back. Now you're pulling above that 20 MA. Okay, so anything near your 40, okay, and the close overall of what we call your river, I'd be happy to take. So I'm going to leave this just for a second. Now we're coming back to the river again. So I'll take it out. I'm going to replace it with a very, very small hedge. So that long was a very high value long because you were so low down. Now, because we're hitting the same area once again, I'm not going to reload the bid at the same size. I'm going to half the size. And also, it looks like you're hitting this very harshly. So a good chance you'll drop under anyway, which you do. At this point, I can now add another 0.25. Okay, now we're coming further and further and further. So I'm just going to check on something like the monthly where we sit. You can see key price action level here. Okay, and you're also bumping onto the 100 MA as well. So this is quite key as a tech zone. So I'm happy just to leave this. And any pushback nearer here where we had that key price action level, I'm happy to exit those longs for gains. And that is going to be somewhere within these MAs. Now, I am actually going to kill it at these MAs because within this long-term downtrend you haven't gone beyond the 40 for a long time. So if you do break the 40 and then dip back, I might consider a bid long. In fact, I'll just take something early, I think. It's going to be a 0.1 because I've already missed a bit of this rally, and there you go, a bit lower there. So I'm going to add another 0.1. And I'm just going to let this ride itself out. I will actually close that one. I'll close that one. I'm going to reassess the position so in case I can add something short, which it looks like I can. So I'm going to take a 0.1 there. I'm going to kill that 0.1. I'm going to swap, take a half of 0.1. Okay, 0.05. And at the low again, I'm now encouraged to take something heavier because we're really talking extremes now. You come an awfully long way. And if you break the low, it's not going to be a problem. Okay, we've now accumulated decent gains, but it does look like we might break the low shortly. So I can look to add another long if we do. Okay, we haven't. We're coming to these MAs. I'm going to hold off the short just because we're quite low down. And now I'm going to take something like a 0.07, I think, because we're not terribly far off the lows on this daily scale, but we have got a bit of a push. Okay, so now coming along, we've got this much, 350 pips. So I'm going to add another 0.7 just in case we stick inside that range. And I'm going to kill that off. And now, because we're seeing a bit of bullish price momentum, I'm going to take a 0.25. I'm going to kill off this old short. And I'm going to see if we get a rally, which we do, which is great. So I removed those shorts effectively with hedge gains taken. You can spend your hedge gains really any time you want, but it's good to do it when it's ample. Okay, when it's good, there's a good chance you're about to see price continue to rally away from your short, which obviously you don't want. So now we're pulling up again. I'm just going to take a 0.15. Price isn't high enough really for me to be uber confident on this. So I'll just take that for gains. I'll take a 0.07 because now we're trending. Okay, see what we get with that. Keep dipping, so I'm going to add another. And this is quite a risk-averse format because my sizes are quite low, but equally the drawdowns have been very low. And you can see we're just accumulating gains as we do every single hedge video. Okay, no problem with drawdown, no real risk. We're never exposed enough to be in danger. A couple of those short, we'll see what we can get. And if we just keep rallying, I'll probably start to look to hedge long on dips if I can. Okay, if these shorts start to fail, which they are. Okay, now I'm just going to add to see if I can add anything more short. I will. I'm going to add 2 more of these 0.7, so about 0.28 exposure now. Probably going to add the next lot up there. And it's going to be quite a heavier position. Let's check the 4 hour and the daily. Now on a daily pullback, I try. Okay, so I'm going to escape that and escape that. I'm going to be out of those, and I'm going to take a 0.1 to hedge off part of that, over part of that 0.07. And again, at this point, I can spend some profits, some hedge gains I've got, and just diminish this. Okay, so that's gone. And I'm just going to add slightly more long exposure. Okay, because we're getting a decent pullback into the river here. Okay, the 20 and the 40 gap, which is very key technically. It's what a lot of Forex algos run off. Take those away. Take I'll take 2 0.05s in this instance. Take those off again. So I'm still taking, so that's $67 versus this. Okay, so that was effectively a hedge. Take a couple more of these on a fall. So various longs now entered. And if we keep going down, I'll just look to the lows to get long. I'm now going to take off this light long. I'm going to take a couple of 0.05s there as a hedge, just in case. Nice drop on those 0.05s. Out for gains there. Leave those longs on. Okay, now pushing through. I don't want to add until we get to the lows because there isn't really any. In fact, I will add just a couple longs there and the remainder lower because there's nothing really important until we get to that absolute low. Okay, so still not there. We might push up first. Okay, great. So I'll take 0.25. And at that point, I'm probably going to stop adding. I might get something lower, but my rate of drawdown, if you like, is quite heavy. The amount of drawdown I'm picking up, is quite quick. So I don't want to make that worse or drastically worse, if you like. So I'm going to be careful of that. So you can see the market's likely to plunder under those lows. Nope. Got away with it. 0.07. And someone asked, what do you do if markets are trending harshly? Well, it has already, but still, if you look at something like the AUD dollar, that's half of this fall already, and you've hardly got any drawdown anyway. I'll add a light long there. So it's important to remember that. You've got to think about the reality, how likely it is you're going to go lower and lower and lower and lower and lower and lower and lower without ever stopping. It just doesn't happen. So I really wouldn't consider adding until you get down here. I don't feel like there's anything that major till that price point I've just drawn. So I'm not going to add. That's another rule there. If you're getting a market piling down and down and down, extremely harsh sentiment against you, then you can really be careful on, whether you're going to add or not. We might get the chance to take something light hedge here if we get a bit higher. Okay, brilliant. I'll take that 0.07 just in case. And now you're seeing a lot of bullish momentum. I'm going to add a 0.07. Take that off for $62. I'm going to remove that for 96 as a loss. Take that for 84 as a gain. And then I'm going to add 0.1. I don't know what that was. I tried to do a one lot. No thanks. Not that low. 0.1 there. Okay, nice gain there. Add a long. See if we can work our way back up a bit. Take that off for gains. Take a short. So picking up a lot of gains there just on these minor moves, which is exactly what you need to do. Typically in FX markets, it's very ideal. Okay. Take another lot there. And I think we'll probably keep climbing. So I'm just going to add. In fact, what I'll do is I'm going to add half that again. 0.05. And again, as always, you'd be trading a multi-asset portfolio at this point. So you'd have various assets in here that you were trading. And obviously your gains would be higher. I'm going to add a couple of shorts there. Light. Going to take one of them away. There. And I'm going to take this gain to cover some of that loss. Take a 0.05 there. Just get rid of that short. Get rid of that long. Take a 0.05 slight hedge. Really, we just want a big push now just to try and end this cycle and essentially get out of everything. Okay, so I'm going to kill those longs, both of those out there. And I probably I'm not really willing to take those longs off higher. Oh, wrong one. Longs off higher unless you can get a good push to the upside. Okay, market climbing. I think you'll get back near that short we entered, possibly. Okay, great. I'll add another short there. And if we keep going up, I'll look to kill that long there. So I'm out of that. I'm going to take that one off. And at this point, what I can do is just see where we get next, I think. They're still climbing, no real big pullback. There's 18 bucks there. Just going to take a light long. On a bigger dip, I think I'm going to kill that former short. So I'm going to take that off for a loss with some of the gains taken. And then I'll add again if I need to. A couple of those longs. And on a push up, we should be okay if we can get it. Which we can't at the moment, it seems. No, still. Okay, so I can take that off, take that off, take that one away, and that one. And again, net gains overall, no drawdown practically the whole time, as always. As every video, high win rate, low drawdown, gains over and over and over, and your profit trajectory should look something like that. And it only dips at the end, obviously, because I closed those trades. I didn't need to. I could have kept doing this forever. But to make this work, you've got to have a high win rate, but you've got to get the sizing right. You've got to understand price action rules. If you can't do that, you're going to take entries at the wrong points, okay, i.e. when something is a key long zone, you're not going to take it long. You'll probably get that wrong, or if something's a key short zone, you won't take it short. Or you'll take a size that's too heavy for the overall spectrum of the market. Based on your higher time frames, you won't understand how they correlate with time frames down the order. So there's a lot to that, really. I mean, often people watch these videos and it's great. You can make profit hedging. You can brilliantly. I mean, this only went from here, okay, to there. So August, December. If you had more assets there, if you had a higher size, obviously you could scale. And that's what a lot of our members do who do this full time. But it works. Hedging is probably the easiest thing you can do in trading, I would say. So that's that video. And again, if I flick through the months like this, it shows you a bit about, where you're closing losses. We're not perfect. We have to remove some of them just to keep the drawdown low. But always making gains overall. As you can see, like I said, every video. If you want to start, go underneath. I'll see you in the next.